back of that, Tim?
Here they are. The stock's down around 14% today, the worst ASX 200 performer on the market today. The Professional Infrastructure and Environmental Services company, they blamed increased competition, higher costs as well as lower rates on why they're forecasting what's going to be a pretty flat first half profit into the first half of 2013. $36 to $40 million is their guidance. Looking at the first half of 2012 profit of only $36.1 million, if they come in the middle of the guidance they've given, it's only going to be a small increase on the previous year. I think the consensus for full year 2013 is up around the $90 million level for net profit. So going by these first half guidance figures, it looks like they might disappoint on that full year figure. It's going to be difficult to get to that $90 million figure. The energy and gas contracts for Cardno continue to be one of the strengths for the company, but they have highlighted the outlook for the Australian economy is quite soft, particularly within that construction area, which continues to be very slow here in Australia. And they've got a very large US operations base as well. They've certainly flagged the uncertainty over there in the US around the fiscal cliff, around the elections and the hurricane also impacting their earnings in the US. But moving forward, US market is one of the keys for Cardno. So a continued US recovery will be a positive moving forward for the company.
Look, I wanted to get your thoughts on another big mover, but to the upside, Fortescue, big moves, up over 4% at the moment, indeed up over 4.5%. Look at your thoughts on the moves today and whether or not you think it can continue.
Look, Fortescue is a standout today, up over 4% as you mentioned. If we have a look at the stock, I mean, it fell significantly. There was the iron ore price dropped off big time. We saw some significant funding issues being raised over the company, but a lot of this has been resolved now. The iron ore price has come back above $120, which is very good for Fortescue. They've also resolved a lot of their funding issues and they look fully funded to expand out to their target. But after it's come back to around the $4 level, it's sort of consolidated around this level for the past few weeks, and it actually looks like it could be just about to make a big move, whether that be up or down. If we have a look at a chart for Fortescue at the moment, you can see here one of the trend indicators commonly used are Bollinger Bands, and you can see here there's been a significant tightening between the two bands here recently, what they call a Bollinger Band squeeze. And as you can see on the chart here, after it's happened over previous times, there's been large moves in the share price after that happens. So you can see here that might be an indicator that the price of Fortescue is ready for a big move. It's also the 100-day moving average has been a significant resistance level over the past few weeks as well, and it's actually now trading just above that, broken above that level today. I think BHP is also another one that's interesting at the moment to watch as well. If we have a look at BHP here, you can see it double topped out here at $35 over October and November here. The neckline here, it's now retraced, which is quite a common occurrence for these sort of double top type patterns. It often drops back below that and then retraces back up to the neckline figure, which is $33.75. So that's going to be a key level to watch for BHP as well in terms of which direction it's going to move next as well.
Look, it's interesting that despite some very strong moves amongst the miners, obviously a very heavyweight sector for the index, we've got the market only up about 0.5%, and that as well coming off the back of a pretty strong Wall Street session.
Well, that's right. It's thanks to the resources today that the market is up, really. It's up only 0.5% as energy and materials, both of those sectors up around 1%, as a lot of the other sectors actually struggling a little bit today. Financials a bit disappointing. We saw some big moves in US banking stocks last night. 2 of the 4 of the big banks are in lower territory at the moment, and the S&P 500 gaining 2% overnight, our market only 0.5%, and there's probably a few reasons for that, really. Over the past since mid-October, the American market has been sold off more heavily than the Australian market. The S&P 500 off around 7% before last night's move since mid-October, while the ASX 200 had only lost 5%. So I think when we're going to see a rally back, it's not surprising to see the US market bounce back a little bit harder. But I think also possibly last night the rally in the US might have been a little bit overdone, a gain of 2%. Really, I think the US fiscal cliff has not been resolved in any shape or form, and that's going to continue to dominate markets for a little while. But I think our market today is certainly helped by the RBA minutes. We've seen it trend higher since they were released. Further rate cuts do look to be coming in the Aussie market. That also saw a slight easing in the Australian dollar, which eased back to around that 104 level. But the ASX 200 sort of at some key technical levels at the moment as well, just moving off them. If we have a look at the market the market graph here, which I did have, here we go, it actually came up here and retraced back to that important 38.2% Fibonacci retracement level, has now moved higher off that level, so it found support there. So also the ASX 200 will be an interesting one to move. On the upside, we're probably looking now for 44.60 if it moves higher, but on the downside, the next point to be watching would be 42.80.